morning's market wrap. I'm Greg McKenna, and it's the 17th of September 2015. I'm a little bit later than normal this morning. I've been going since 4 o'clock, writing heaps of stuff at Business Insider and Go Markets, and it's been an interesting night as we run down to the Fed at 4 a.m. tomorrow morning, Sydney, Melbourne, Brisbane time. Last night's move in stocks with the Dow up, NASDAQ up, and S&P all higher has taken prices to the top of their wedge patterns. That's an interesting dynamic right before the Fed, I should say. And I know that a lot of traders will be leery of that, but it does suggest that that market in particular is at least comfortable that the Fed's going past. So in the end, the Dow finished up 0.84% at 16,739. The NASDAQ was up 0.59% at 4,889. And the S&P 500's up 87 basis points to 1,995. That's 0.87%, I should say. Obviously, last night's move follows the massive 5% rally in the last hour of trade in Shanghai. But it wasn't really Shanghai that set the scene, although the tone was better as Europe opened. We had a couple of big pieces of news. One was the SAB Miller Anheuser-Busch tie-up to make the world's biggest alcohol company or beer company. And that got things excited in terms of M&A and those kind of things. And then, of course, we had the massive rally in oil. The IEA said that stockpiles were down, and obviously oil bounced off those lows that it's been seeing. If you have a look at an oil chart, you can see pretty nicely where it's bounced off over the last little while. In many ways, it's had a flat bottom with a declining top, and it's broken up through there. It hasn't broken sustainably yet, but at $47.50 this morning in Asian trade, it's looking increasingly like that low might have been a medium-term low. It doesn't mean it can't still get to the 30s at some point, but it looks like oil might want to break a little bit higher. Of course, everything I say today is tempered by or conditional on what the Fed does, pardon me, what the Fed does tomorrow morning at 4 o'clock. It's also tempered by the fact I think they should tighten, but I guess the market's saying that they won't. So on the one hand, I've got the rhetorical side of me which says they should tighten, they're mad if they don't, which would obviously knock stocks back and push the Aussie dollar back. But on the other side, you've got an Aussie dollar that's broken up through its 5-month downtrend. I'll just bring that chart up for you now. You can see in the Aussie that if we go back to the daily, and I'll share that screen, have a look here. So you can see here, I've got my little cursor there. You know, this goes back to May, late April, early May. Had a couple of touches on it. All right. Some people might say I should not have ignored that one, but I did because clearly, you know, in terms of parallels and that kind of stuff, it's been working. This green line here, that's a long-term line that goes all the way back to the low in 2001. Not GFC. I think I've written GFC lows, but I mean the 2001 lows. Which also touched the GFC lows, of course. So what you've got is you've got an Aussie dollar just trying its best to sneak back above, those levels. In terms of the way I trade, you can see, if you can see the cursor, I got bullish down here, if you remember. I said it was going to go to 70.80, it did, and I said it was going to go to 71.80, and it has. I got it, I took some profit, and then I closed out again the other day. So took the other 50% off, and now you're starting to get a break higher. So it's almost time for me to get back in and to buy the Aussie again. One of the things with the Aussie at the moment is we know the market's really short. We know we had a pessimistic crescendo last week, or the week before, sorry, with that move under 69 cents. We know everyone hates the Aussie. You know, the reasons for selling Aussie are large and, well understood. To me, that just means it's all priced in, which is one of the reasons why I was happy to be, bullish back when it was, 69 cents and stuff. So we'll see how that goes anyway. But a few family friends who are traveling or have got their own businesses, I've told not to hedge yet. So obviously I'm putting their money where my mouth is, and hopefully we're going to see that rally. Of course, the Fed could do anything tonight, and it's interesting that the OECD said to them last night in their latest report that the time for taking away this emergency accommodation is now, because the slack in the US economy is falling. And we all know that. It's just really going to be a question of when. It's not an if. The CBA guys reckon that they're going to pass at this meeting, but signal they're going to hike once this year. So that would guarantee either October or December, and the market can get used to that. And then also to downgrade the path of tightenings in 2016 and 2017. I think the downgrading of the path in tightenings in 2016 and 2017 is entirely appropriate. And even though I'm in the camp that says it's time to tighten, I'm firmly in the camp that says one and done is what they should be doing. They should be tightening once and having a dovish tightening, so signaling that they're now going to wait a few months and see how they go. But it's all conjecture. We have to wait and see how things are going to look tomorrow morning. But if I quickly just share with you the 4-hour SPY chart, and you can have a look at the setup there. You can see that we've had this nice pennant, tried to break out. You know, it's not the most special break you've ever seen. You know, we're just above the top of it here, and you know, we'll have to wait and see what happens tonight. But for the moment, there are some bullish setups as opposed to necessarily outright bullish. Although I do think the Aussie is going to go higher, so I'm a bit bullish on that. In terms of oil, you know, NYMEX front contract could get back to 49, 49.60, something like that, based on the price action that we've just seen, and that's going to continue to be bullish, and that helped stocks. The ASX today should look better. It reversed the day before yesterday's 1.5% loss with a 1.6% gain last night, and futures are up 38 points for the December contract, so it should be another good day. In terms of the outlook today, we don't have anything except the RBA bulletin here in Australia. In Japan, we've got some trade data. And then in the States tonight, we've got retail sales in the UK. And in the States tonight, we have jobless claims, Philly Fed, and then, of course, the Philly Fed Manufacturing Index, that is, and then, of course, the Fed tonight. So it's going to be an interesting night. I guess you'd have to expect that initially when the US opens, you might see some profit taking after a good couple of day rally. You know, that could drop the Aussie back into the 70.5 kind of region, those kind of things. But it all really does hinge on what the Fed does. And it would seem reasonable if the Aussie some stage today got back to 71.40, 71.50. But that might be a good short-term place to buy. But that's it from me. I'll be back tomorrow morning at around 9 o'clock. I apologise for being late today. But levels are still working. Technicals still look like they're working. I'm still keeping my stops and my position sizing relative to the market volatility, and that looks like it's still going to be high. So not that I'm here to advise, but stay safe out there and keep your positions relative to the market. I'm Greg McKenna. Bye for now.